Good morning, everyone, and welcome to the European crossover webinar. And we'll take a look at the economic data that's on tap. So we had Italian GDP coming across the squawk saying 2% on the quarter, negative 2% that is. At the top of this next hour, we are going to have Eurozone GDP flash. And later this morning, New Zealand dairy prices. Coming into the States, the only thing we're going to have is ISM, New York Index, and that will be it. Yesterday, the big story of the day was the silver market. We've seen them where the CME raised margins on that. So that's pretty much put the knife in the market. We did talk yesterday about, I got to turn this guy to squawk off. Half the time I don't even use this squawk. Honestly, it's annoying. Hang on. Yesterday we did talk about the weekly resistance here and how that had just tagged that, and we came back pretty strong. We dipped, then we came back strong, then we turned around, we dipped, and then this market really lost a lot of momentum. I had even put in the chat, it was in 29.96 was really important. We had to go and defend that area. Once we lost that on a 2-hour close, and really the bottom started coming apart. But now with the increase in margins, I think it's really knocked a lot of people out of the box. And the market's so fast, and you have to be kind of careful trying to manage it in these fast type markets. But I think this jump in the margins pretty much knocked a lot of people out of the box. And also the talk about trying to run that market. Those already talked during the European session yesterday that, hey, it's all blue. It's not to be. So we saw that fall through, and then we saw the downside. And I think that took a lot of starch out of the sellers. So I think that market's dead for a while, to be quite honest with you. I mean, I tried to say yesterday, we're at that key level that we came into the key weekly level, blah, blah, blah. And, I guess nobody really paid attention. And here we are down. And I think that pretty much put the spike in that market for now. We'll take a look at where we stand here in FX overall. Just a real quick recap. Taking a look at Euro, we finally closed just below that 2073, and I was indicating that was our support, which it did hold initially. Said if we close below that would open the door lower, which it should, although this market's holding up relatively well. I mean, it's not going anywhere. It's not rallying, but it's not falling either. Cable, basically same old. No big thing. Flirtations with 37, but we never really able to push beyond this huge key 78% to 37.44. Moving on to the Aussie, we did dip, and we're just kind of stuck in a quiet market overall, though we've been trading in that range for nearly 3 weeks. Between 77 and 78, we've dipped back, and we're just trading relatively quiet. Kiwi's actually held up a little bit better. We look like we could break a little bit lower. It's not like we're going for gangbusters, but it is holding up better than the Aussie. Moving on to the dollar CAD. Solid rebound yesterday, but not very much follow through today. We're kind of paring back. Dollar peso dipped back after we had that strong day on Friday. We kind of dipped back and like we're dipping a little bit lower. We're into that key level, that 2023. We've talked about that. That's been a huge level for a long time. Dollar yen finally broken out, but yesterday we had a resistance at 513, and the resistance, the high for the day was at 503. So no changes there. That's still going to remain as far as the resistance that is, but looking pretty solid after that break. And then lastly, the dollar index. We did get above the bias chart resistance of 90.89, but we said in order to generate short covering, we need to get above 91.09, and we weren't able to do it. That'll be resistance for today. So that's it. And we'll take a look at the indices. And this thing really came back. Fortunately, I didn't get in too early. I mean, I had made about 3 scalps before I got short, and I'm actually underwater right now. But I thought that I was surprised that we went up. This has just been a really challenging market to say the least, because for a while, and I've said that before, for a while this market would trade very closely with Fangman. So it was easy to call this market. I want to say easy, but it made it really favorable to just look at Fangman overall and you call this market. Then this market started to, as you know, we've talked about that, separate from Fangman while the go back in here. While Nasdaq was rallying all through here, Fangman was doing absolutely nothing, which is frustrating because it was like, well, Fangman not doing anything, but we're just rallying. So that's saying we started to look at some of the pandemic stocks like PayPal, Peloton, eBay, and those really gave us a better clue as to where the market was going. Then, of course, we got the break lower, and then some people yesterday were looking for this market to really follow through. I did see this here early on in Asia, which had me like, wait a minute, it looks like it would want to go a little bit lower to dip down into towards the 12,600, at least down into this lower 12,732 and test that area. But I said, you know what? It's got a hammer on a 2 hour. So you got to respect that. And one thing about the NASDAQ is it trades very technical. So I left that thing alone, and I was trading silver yesterday morning. So I didn't step in other than the quick scalps mid-session, mid-morning, I guess. So I was able to do okay. And then later in the day, I'm thinking, well, this thing isn't going to get beyond this area here. And we have. And now the thinking is now, which we did have before. Oh my goodness! Well, look at all these great earnings that we're getting out of Amazon. Well, Amazon's this week. That's when they think is going to push even higher. Out of Microsoft and out of Apple, we should be going higher. So now there's a little extra boost that we got here because of the stimulus talks, which sounds kind of crazy, but that is it. So I think really this is more about people that got trapped here. And my overall thinking is that I think we would have knocked enough people out of the box. I'm not saying knock them out of the box. That, as I had said last week, would have taken that protection, which I kept squawking about that all early last week, and definitely on Tuesday and strongly on Wednesday. Eventually, we did go and break down. I think that those people were looking for a much further move lower, which seemed plausible. I myself was looking for really move here. This, I will say, that saved me from trying to challenge it, because I said, you know what? I don't know how many times I've seen this sucker put in like a hammer bottom, on these 2 hours, and then all of a sudden we just start taking off. So that helped me. I think that a lot of people came in and was selling it, in late European session and early U.S. session, and I think they stayed with this, and now this thing has even moved, beyond. We'll see where that transpires, but that's the take on that. We'll go in and take a look at the news. That kind of gives us a slight overview where we're at. Obviously, we'll take a little recap on the silver. Silver drops from an 8-year peak. A stellar rally loses steam. Silver dropped more than 2% on Tuesday, retreating from near 8-year peak, and hit in the previous session as a margin hike by the Chicago Mercantile Exchange, prompted investors to take in profit. A CME group raise of CME Comics 500 silver ounces futures margin by 18%. CME steps to increase the margin on silver trade and discouraging the highly speculative behavior in the market has prompted some profit taken, said IG market analyst Kyle Rhoda. The margins are deposits mandated. We see all of us know what margins are. The fact that silver moved up without the spikes in other precious metals and industrial metals suggests that it's an outlier of sorts and therefore vulnerable to come down quite strongly, said EDF and Man Capital Markets Edward Meyer. Analysts expect prices to remain volatile in the near term. And that's what I say. The problem is with silver now is that as you raise those margins, you knock a lot of people out of the market. So now you can get real big swings, and you don't have, not that it's ever been a great liquid market, But I'm just saying, you take a lot of liquidity out of it, and then that you really have to be careful with. I saw some of that develop yesterday, and liquidity just started drying up. Dollar hovers near 7-week high after boost from euro sell-off. Dollar hovered near 7-week high on Tuesday, benefiting from euro sell-off overnight after coronavirus lockdown choked consumer spending in Germany. Euro sank the most in 2.5 weeks on Monday after data showed retail sales in Europe, the biggest economy, plunged by more than forecast in December, with the continent all still struggling with the vaccine rollouts. When people think about selling euros, invariably you get some buying of dollars because the euro exchange rate is easily the most liquid in the world. A buyback into the U.S. currency was long overdue. Speculative bets have fallen in a safe haven U.S. dollar as the Biden administration proposed a $1.9 trillion stimulus that has encouraged investors to put money in riskier assets. Some hedge funds may be forced to unwind their dollar short positions. On the whole, global markets remain, with institutional investors trying to get with grips with the retail trading frenzy of GameStop. And so we can also take a pop look at GameStop. But my thinking is, like I said, could be wrong here, is that I would think that the people that the bigger hands that did say, hey, I got to protect those profits, they weren't just going to immediately come in on Monday. There might be a little bit of fall through here, but I still have to think that over time, whether it's towards the end of this week or next week, we'll have to venture back down towards this trend line that was in place for so long. Look at that. And we would probably come back there to establish some value. I don't think we just turn on take off unless all of a sudden the blue sky, they come up with the stimulus. And although they had those people at the White House, that's just your initial, like, how you do. And so I don't think we're going to get anything immediate, like in a week or probably not even 2 weeks. So I think we'll have to venture back down into this area. We'll see, though. We'll see how that goes and plays out. So that's where we stand. We'll go in and take a look at the analysis now. I think that provides us a quick overview and recap of where we stand. But those hikes in the margins for silver, that's going to end up driving a lot of people out of the market. Of course, it forces selling. You've seen that, a result of that selling. In Asia, we were down 79 cents. Now look how much we've come off in silver. Look at that, $1.54. So you have to factor that in. I saw someone saying they're underwater in their silver position, but when you raise those margins, that's automatically people are going to jump out. People can't afford it. And then on top of that, you're going to have even those that are in it. Well, when you raise the margins, you're just going to have as much liquidity. And then when you want to get out, you want to be able to get out. And if you don't have as much liquidity, you just see these jerky price moves. So that being said, let's go on and move into the analysis. We'll take a look at the euro dollar. So the euro closed sub 2073, but has not seen follow through. Support will be 2010 with resistance at 2108. Here's our 2073. That worked pretty good yesterday. I had been in place actually since Friday, but held the market 2010. And you can see we're coming up with the 2010. You could even make the case right there for that high. But we'll just stick with where it's at and see if they do slide back down. And on the upside, 2108. Onto the cable. So cable continues to dawdle, floating with moves above 37. Resistance remains 37.44 with support at 36.29. So no changes there. You can see that. And on to the Aussie Dollar. Now, the Aussie traded Monday in a tight range. Support will remain 75.75. with resistance at 76.78. So we right here, we were saying what we thought. Well, actually, we come in on the Asian session on Sunday, and that's when we do the analysis. So, but this held within this tight range, and we haven't really gone anywhere. We tested the downside by, taking it out by maybe 2 pips, 3 pips, and the same on the upside. So no changes here in the Aussie. Support is 75.75. Only thing is, I think we did lower this a little bit, but it's going to stay the same. Actually, I think we hit it at 76.78. One moment. Yeah, we did. So 76.78. Onto the Kiwi. The Kiwi traded in a tight range on Monday. Resistance will remain 72.39 and support at 71.07. So definitely no changes on this one, on the Kiwi. We're back to trading quiet in FX for now. Onto the dollar CAD. Whoa, boy, we're starting to give up these gains. Look at that. Now, the dollar CAD posted a solid close on Monday. Resistance will be 28.80 with support at 27.84. Well, we're right there. We're 27.86. So 27.84. And resistance, 28.80. Onto the dollar peso. The dollar peso saw a relative quiet session on Monday. Resistance for Tuesday will be 20.52 with support at 20.23. And actually, we've just dipped. We're testing this. This has the level right here, 20.23. So we've actually gone a little bit below it, but that's going to be support. So look at this way. If you're short, you want to just tighten up those stops, but it's not unreasonable. After the strong move, they'll come in here and they'll test this level and try and see if they can get some stops below it. 2023, 2052 on the upside. Well, we've already come off, and the high for the day was 2039. So we'll go back to what was old resistance, 2043. There we go. And on to the dollar yen. So the dollar yen closed slightly higher on Monday. For Tuesday, resistance remains 513 with support at 452. Onto the cash dollar index. Dollar index on Wednesday closed above the bias chart resistance of 90.92, but still needs, as noted, a move above 91.09 to spark short covering, which will be Tuesday's resistance. Support will be 90.52. So we got above that 90.92, but we couldn't get above 91.09, which is what's going to spark short covering. Still remains bearish. And move into the cross rates. This thing's still holding up relatively well on the Kiwi yen. I don't see any changes here. 74.43. Still doing pretty strong. I guess you can actually move it to right. You see that closing here? That would be support now. 74.68. And support resistance 75.42. That will remain the same. Onto the euro pound. This thing still remains lower. Just as we did the previous day, we'll use yesterday's low as the support. So it's going to be 88.03. And resistance, which we had the 88.75, is a bit ambitious at this point. It's going to actually be right there, this low here. It should be this high, but I want to get at least a little bit of room. So right there, it's going to be 88.57. On to the euro odd. Trade relatively quiet. Thought we might have seen a little bit of shaking around. We haven't. We've come back to test. So this is going to be support where we're at right now. See that? 57.68. Well, actually, we had 57.67. Okay, good call there. On the upside, it's going to be this bar open right there. 58.87. Onto the euro Kiwi. They tried to shake things up a few days ago, and now they're just falling back right on their face. We're going to go right here with this open here, which is just below that level. It's going to be 67.94. And resistance is going to be that closing bar right there, 69.04. On to the Aussie yen. No changes here in the Aussie yen. Really quiet day. So no changes. On to the guppy. This thing is still trying to push higher. Holy smokes. We'll still stay with the 43.79. No changes here. On the downside, we're going to stay with this 42.85, which is basically this high wick there. Yeah, it's right that one. So no changes here in the guppy. Still trying to flirt higher. And lastly, sterling odd. $80.36 on the upside. That's reasonable. This held pretty well here. So this would actually move up to 78.61. Take a look where Apple is. Actually, look, Apple even gapped higher here. Was putting up a little bit of upside pressure. Amazon strong. Amazon has earnings this week, if I remember correctly. Let me see here. Google has earnings. No, I'm not going crazy. I think I know they said Amazon this week. There's Google. eBay is tomorrow. PayPal's tomorrow. Peloton is Thursday. Maybe I'm going nuts, but I could have sworn. I know they said Amazon. I'm looking through here and eBay tomorrow, PayPal tomorrow. Oh yeah, Amazon's today. Amazon and Google reporting today. So we'll see how they hold up. Amazon expects to do really well today. There's Google, Facebook here. And that's the kicker is here is We did come down towards that 50, but we broke below the 20, but now we've closed back above the 20. I'm talking about the NASDAQ. So like I said, I think we just caught a lot of people here. So it's just interesting. I think we might have to get past this week to see what we really do here in NASDAQ. But things, like I said, now they're trying to swing it back to the Fang Man, and also they're got a little extra boost with this idea of the stimulus talks. But I don't think that's going to go anywhere anytime soon. I think we may get that, but it's not something that's going to develop over the next few days. So that's it. We've pretty much covered everything. Everything's trading relatively quiet. Index have come back. We'll dip back and take a look at Bitcoin. But Bitcoin a little bit interesting. Back now above 35,000. There we are. We've talked about that, the significance of this level. We broke above it on the Elon Musk talk, and then we gave it all back. Then somewhat favorable that we're back above it. So other than that, not a whole lot of news. I don't really pay that much attention to S&P. I mean the ES, but it is doing better. So I guess I might just keep it up on the line. I actually had the silver here, but like I said, with everything that's already happened on the silver, you lose a lot of that. And I'm not a buy and hold person or sell and hold. So I need to be able to, get in and out of the market. You raise those margins, you drop a lot of the liquidity. And it makes it a little bit tougher, and not interested in trying to get stuck into a position. So with that being said, that's going to be it. Here we are on the NASDAQ. We've gone further than what I would thought, but I think eventually we'll end up coming back potentially down here towards this I guess about 130, but that may not emanate or may not come around until later on this week or into next week. I think we're just kind of stuck right now because we've got a lot of people trapped who thought we were going to be much slower. But that'll be it. Thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room.